Hello, good morning. Welcome once again to Bearable channel. I remain your host, Bearable King, and what I'm doing today is different from what I've been doing, and I'll explain the reason shortly. But once again, welcome to this channel. I hope you've had a lovely week. Welcome to the month of August, to the 8th month in the year 2023. I think the last time I did a video sharing my analysis was about two weeks ago thereabout, and I do apologize. The reason for my absence is because of my health. I've been in and out of the hospital. I had to take time to rest. I took a while, tried to come back, but man, the weather in Nigeria is crazy right now. Cold is killing me. But nonetheless, we move. So if you recall, I mentioned earlier that I don't like trading between July and August because I personally, now this is a subjective point of view, it's not a fact, it's what I've learned. As you start trading, it's just like when we were kids, we wanted to be astronauts, we wanted to be lawyers, we wanted to be doctors, we wanted to be engineers, we wanted to be business moguls. But as you grow up, you drop some things and you learn some things, and then you hone your skills, and now we're here as forex traders. So I used to trade a lot Mondays to Fridays, and I kept on hitting the chart back to back, month in, month out. Then after a while, I had to do a review of my trades and all that, and I discovered that there are some periods I shouldn't be trading. For example, if you've been following me keenly from my Telegram channel, you know I don't like trading on Mondays. I really don't like trading on Fridays. I trade less during the beginning of the year, towards the end of the year. Then also in August, I really don't like trading. So what I'm just going to do today is I'm going to do a video that's going to cover what I'm expecting for the entire month of August and show you what I personally would be doing in the month of August so you can take advantage and work with me. Okay, all right, fantastic. So let's go to the chart quickly. But before we go to the chart, we always have to check the news because that's where we source our liquidity from. All right, so the first week of August has passed. We didn't do so much trading till Friday after the NFP was released, and the reason why we did that was because we were expecting some hunts, and the market did what we expected. Okay, so we are entering the second week, which is from 6th to 12th, and during this period we really don't have any serious news till CPI on Thursday by 1:30. So that means you could trade heavily on technicals on Monday, Tuesday and Wednesday. However, I want to share an insight with you right now. If you notice during the week before a major news event like this CPI, that the market is ranging, it's best to wait for the news to happen, then trade in line with the market. Because when you see a consolidation is like the market is entering a spring mode and the market is compressing. So by the time the news is released, you see a massive breakout like what happened last weekend. I'll show you that on the chart shortly. Okay, so on Thursday we are having CPI, we're also having unemployment claims, which is fine. Aside from that, we also have news on British pounds on Friday. Then we have PPI on Friday as well. But the major news next week is the CPI news. So that's what we're going to be looking out for. But aside from that, next week should be a very good week to trade. The third week we have a lot of news, but none is really important. Aside from this FOMC. FOMC is a major news to look out for upper week, but well, till then we probably wouldn't be in a trade by then because we might have met our target for the month of August. Okay, right now I think we are up almost about 200 pips, and we currently have a gold trade running with roughly maybe 20-30 pips in profit. Then the fourth week which is more like the last week. We have a lot of manufacturing news from Euro, Pounds, USD as well. All these news are not really heavy as the CPI, FOMC, and NFP. Okay, then the last week ends on Thursday, and that Thursday we have a few news to focus on then. But basically, in all the news I'm looking at right now, the only one that bothers me would be FOMC and CPI. So for now, I can say that we shouldn't expect too much when it comes to news interference in the market. All right. Yes. Okay. So if you're not following, if you've not subscribed, please ensure that you subscribe to this channel so that it will encourage me to put more work out there. Now let's go to our chart to see what we are expecting. Okay. Let's see. Okay, fantastic. So for those that know me, they know I love gold. So as a trader, when I first started, I used to trade as much as 15-20 pairs. And for the last 1 year, if you've been following my Telegram channel, Bearable FX Free, you would notice that I've been focusing on just 3 pairs, which is EU, GU, and gold. But if I were to focus on just one pair, it's probably going to be gold. I love gold because gold is moderately volatile. It's not slow like EU, and it's not as fast as Nasdaq and the rest. And it gives me what I want. And aside from that, because gold is universal, it tends to respect the structure more. Okay, and because it respects the structure more, it's more appealing to me. Okay, so now that we're in the August session, the summer break session, in my own subjective mind, I'm not going to be trading a lot because aside from the fact that I'm on bed rest, um, this period is also not a period to rush, especially when there will be consolidations here and there. This is a period to wait to see what the dynamic traders are doing and to take advantage of the market with them. Okay, so right now I've gone to the monthly time frame because I'm doing a month review for this. Now if you look at this chart right here, what you can see here, let me zoom in a bit. Now if you remember this chart with me, I mentioned that because we had this breakout here, this bullish engulfing candlestick, it's a confirmation that the market is about to go higher. And the reason why I said that is because if you look at this place, we had a rejection here. This is a reversal pattern. Here we also had a rejection here by this shooting star confirmed with this engulfing bearish candlestick. But here we had a bullish candlestick and a bullish confirmation that the price wants to go higher. So what happened here? The price pulled back to this zone, and in the last 2 months, which is June and July, the market gave us a railroad pattern, a bullish railroad pattern. Now if you're conversant with candlestick setups, you would know that this is an indication that the price is about to go up. And on the monthly time frame, what I'm looking at is the possibility of this price moving from here to this area. Okay, but that's on the monthly time frame. So for example, let's say you are a position trader, you're not a swing trader. A position trader are traders that take trades from the beginning of a move. What you could easily do is take a buy here, set your stop loss somewhere around here, which is roughly about 600 pips. Set your take profit somewhere around here, which is about 4,800 pips. That's all you need to do. Set it, maybe come back in 2024, 2025. The market might have hit your take profit or your stop loss. Okay, the reason why we have a risk to reward ratio is because there's always a risk once you place a trade in the market. All right, but here's what I'm saying. I have an engulfing railroad pattern. We could even assume that this candlestick, this very bullish candlestick, is slightly bigger than the bearish candlestick, the previous bearish candlestick. As you can see, it is slightly bigger, but for the sake of proper analysis, I'll be looking at it as a railroad pattern, which for me is an indication that this candlestick is most likely going to move up. Okay, so if it's moving up, the first point of interest will be around here, which is around 2080 per ounce of gold. Okay, so this is what we have on the monthly time frame. Okay, now I'm going to go to the weekly time frame, and the reason why I'm doing this is so that you can see what I'm expecting from the market. Okay, now on the weekly time frame, I did mention earlier that the market was giving us a range from here. This was around June 2020. It came up to this point, came down here, right? Came up here, and after it came up here, it came down here, touched it a bit, gave us a fake movement downwards, and after this, it gave us a first push up. After the first push, it came down, and after it came down, the market pushed up to this point. Now that it has pushed up, we can see that there is a nice rejection here. A nice rejection here. What do I mean by this? If you look here, we had a resistance here. We had a resistance here, right? And this resistance was broken here, and after it was broken here, it now served as a support for the market to push up. Likewise, we had a resistance here, right? And after the resistance here, the candle broke it, came up, and after it came up, what happened? This point is now serving as a support here. So if we are going to act based on what happened here, the market served as a support here and did what? Moved up. What would we be expecting here as well? So we are expecting that this candlestick from here too would also do what? Move upwards. Okay, so we are expecting what? That this candlestick would move upwards. This candlestick would do what? This candlestick would move upwards. So in my head, starting from Monday, every pullback on gold would be an opportunity to buy the gold market. It would be an opportunity to buy the gold market. I'm not looking for a sell because I'm expecting this market to do what? To push upwards from here. Okay, I'm expecting this market to push upwards from here. So for me, for the entire month of August, I would be focusing mainly on gold to look for an opportunity to buy long term. To look for opportunities to buy long terms. I'm not going to be taking any sell. If there are sell opportunities in the market, I'll be looking for opportunities to buy. Now, if you look here, we have something like a morning star pattern. And the morning star pattern is a confirmation that what? This market is about to go upwards. And guess what? We just had this candle drop into the zone to close the gap here, and what happened? The market has pulled back up. This is on the weekly time frame. So what I'm expecting is at least this market should move up to this point and possibly break it. If it does break it, then I'll be looking for a pullback to this point before we push to the higher high. Okay, I'll be looking for a pullback before we push to the higher high. Alright, so this is on the weekly time frame. I am bullish, and that's what I'm expecting from the market. Okay, now I'm going to the lower time frame, which is the daily time frame. Alright, so we had this here. I know a lot of people did this. They marked this point, drew their trend line like this, and said, oh, the trend line is broken, and because the trend line is broken, they're expecting the market to do what? To fall. Now, I'm not saying they are wrong. Here's what I'm saying. When you have a low here and you have a higher low here, until a lower low is created, the trend has not changed. Let me say this again. Here we have a low, right? Let me show you. We have a low here. We have a higher high here when you compare it to this or this. Okay, so we have a higher high here. We now have a higher low here and a higher high here, which has confirmed that the market is in an upward trend. From here, the market has pulled back to this point. Until the market closes below this level, which is around 1800, the market is still what? The market is still in an upward move. Okay, and that's one of the problems of people who use trend line. Sometimes they focus on the trend line and get stopped in the market. So we're not going to get stopped in the market, rather we are going to trade what we can see from the market. All right, okay, so I'm zooming in a bit now so that I'll show you what I'm expecting on this time frame. Now, for those that have been following me, I've been mentioning that I'm expecting an inverse head and shoulder. And the reason why I'm expecting an inverse head and shoulder is because I can see this. This is one here, come up here, came down here, came up here, right? And now what happened? The price pulled down to this level. The reason why the market came this low is because there was a previous low here. Now, I'm not saying that this is the reason why the market came down. I'm only referring to the fact that I gave a room to expect that the price will come here, because for you to trade right, look at what has happened on the left. There was a hunt to this place, right? Now, if we add 1, 2, 3, which is Wednesday, Thursday, Friday together, you would observe that the market just hunted down to this point and came back up to this level. All right, so from here now, I'm expecting the price to come here. Okay, if it does this and we have a break, then I'll be expecting it to come back to the top. Okay, I hope this makes sense to somebody. So I'm saying that right now we have a structure that looks like an inverse head and shoulder setup. Okay, we have a structure that looks like an inverse head and shoulder setup. Okay, all right, hold on, let me see if I could do something. I actually want to show you what I'm talking about for ish. No, can't do this. All right, so I want to show you what I'm explaining here. So right now I'm expecting an inverse head and shoulder. So the first point is this market has to come as high as 1981, then break above it. Once it breaks above it, I'll be looking for a pullback to do what? To buy to this point. Okay, now there's something I need to explain as well. When you see an inverse and head shoulder or a head and shoulder pattern, it simply means that the trend is about to change, the same way you have double tops and double bottoms. So why am I saying this? I'm saying that if the market should break out like this, pulls back a little bit and comes up here, then it could pull out back a little bit and do what? Continue going upwards, because the trend has just changed. Okay, because the trend has just changed from a downwards trend here, and now the market has resumed an upwards trend. I don't know if that makes sense to anyone. What am I saying? I'm saying if this price should give us a higher high here, all you simply need to do is join your trend lines together, clone it to this point, and wait for the market to pull down to these areas, right? Pull down to these areas, and then you look for buys. Okay, meaning that we're now in an upward trend. Okay, so right now, if you look at this candlestick here, we had a rejection here back to this point. You can see that it's back at the point where this one came down. Okay, the price came down to this point, and the reason why this happened was because of the news that came out on Thursday. Okay, let me quickly run to the 1 hour time frame to see if I can quickly show you that. Okay, fantastic. All right, so see what happened here, right? The market dropped till Wednesday 3 p.m. and what now happened? The market now started ranging. Okay, now after the market range, this was when the NFP news came out, and what happened? The market dropped to that previous low that we marked on the daily time frame, and it was pushed back upwards. Now if you know how to trade a range market, what has happened here? We had the market range here, from here 1 2 3 4 5 6 7. Then there was a hunt, and then what happened? The market broke up, came back down, tested this point. So what are we expecting right now? We're expecting that the market will do what? Fire upwards. Okay, so that's what happened on the lower time frame around this zone. Okay, around this zone. So right now I'm expecting an upward movement towards this point and this point. Okay, so I'm going to switch to the other chart which I had, and if you check my video of last 2 weeks when I mentioned gold, I said we had a range market here before the drop, that we may also have a range market here, which is what we've experienced here, right? What we've experienced here is a range market, and I mentioned something to someone. I said on the daily time frame, if I see this candle come back into this range, then I will just accept that this was a hunt and this also was a hunt, which is what I am taking it for. So right now I'm expecting this market to push upwards. So I'm going to go to the lower time frame, which is the 4-hour time frame, to show you what I'm expecting this week, what I'm expecting next week, and what I'm expecting for the rest of August. Okay, so on the 4-hour time frame, as you can see, I have marked this chart, right? I've marked this chart, and because I've marked this chart, I'm looking at possible setups. Okay, indulge me. So right here, what we can see is the market came down to hunt this place as it did here. If you notice, we also had something like that here and here as well. If you remember when we did this in July, I did mention we took a buy from here 1916 and we rode it all the way to this point. But what happened? The market didn't pull back as it did here. It wasn't that choppy, rather it came all the way here, then started giving us a bullish flag. So this is a bit of a bullish flag right here, right? So the market just gave us a bullish flag and came down to this area. All right, and it came down to this area respecting this point and this point. Okay, so from this point, what we're expecting that the market would move all the way to the top here, which is what we're also expecting right now, somewhere around here. Okay, after this hunt, you can see this strong bullish engulfing candlestick covering what was done for some days, like 2 days, and now we're expecting it to push up. So right now, what am I expecting? I'm anticipating that the market should push up to this level, which is around 161, which is roughly about 400 pips from now. If it does, then I'll be looking for it to break above these levels, meaning that it could come somewhere around here. Then once it does, I'll be expecting it to come back to retest this point and then push higher. Now if it does this, it means that this head and shoulder setup, the neckline has been broken. And if you know the rule for head and shoulders, you would agree that the length of the head to the neckline is what you should expect after the break of the neckline. So if we have a break of the neckline here, I'll be expecting this market to possibly pull back a little to retest this neckline or the trend line and then push all the way to the top, somewhere around here. Now fantastic. Now if the market is going to push to this level, let me mark it. This happens to be the level that we marked on the daily time frame. Let's see. Alright, fantastic. As you can see, it's close to the area that we marked earlier, that okay, if this market breaks out, we're expecting it to come back to the top. So you see the higher time frame and the lower time frame are aligning with themselves. So I'm expecting a move like this on 4 hours time frame. So what am I expecting? Say from like Monday, we may see a small pullback or maybe even a further push to this level. Now here we have this, we have this, we have a pullback, we have the price here. Fantastic. Please, I'm focusing on gold because I'm just going to do one video, and aside from that one video, I probably wouldn't be doing another video for the rest of this month because I'll probably be saying the same thing. So right here we had a drop from here, a pullback to this point, then a drop here. Now what am I expecting? We may have a push to this area, pull back here, and then a push to the stop point here, right? And once we have something like this, we already have a break of this trend line, then the price will come down here, test this point, and then do what? Push above this level. And if this happens, we may now expect a pullback, and then we push the market to this point. Okay, so what am I saying? I'm saying look for buys. Let this market push maybe on Monday, Tuesday, or Monday. Once we get a pullback to like 140, we look for a buy to 175. Once we take that, we look for another buy around 157, 155. Then we take that to this area, which is around 187, 190. Once we have a break above that level, we look for a pullback. I don't know how far this is going to come because it's going to be correcting an entire move. If we're going to apply the normal structure, we can apply this, a trend line like this. So if we're applying a trend line like this, we may have a deep correction to somewhere around here. Anything can happen, but you get the whole idea that the market may bounce off here, or the market may come down here, or let me take this and do this here. Okay, so the market may either pull back towards this area somewhere around 1950 or bounce off this area and move upwards. Only time is going to tell us, but from here we'll be expecting it to run all the way to 2069. Okay, so if we have a move like this, if the price comes down to this area, then we know okay, it's a good time to take a long-term buy. Prior to that, we would be buying every pullback. So I'm expecting this move to be done within now and the end of August, and then maybe September, October we may see a pullback, a deep pullback. Then maybe from November we may see a long-term buy. But this is me just speculating about the timeline. Okay, so this is what I'm expecting. I hope I've been clear. If you have questions about this, please comment in the comment section below. Make your inquiries there, ask your questions there, and I would be able to address it. So for Monday, I'm anticipating that this market may run all the way to the top, say around 1955. Then maybe Tuesday we may have a pullback, then Wednesday a continuation, or maybe later on Thursday we may have a continuation, because remember we're having a major news that may push the market upwards. Okay, so this is what I'm expecting on gold. So we're waiting for this break. This break will confirm that we are going higher. All right, but till then I'm just going to take advantage of this internal move for now. We have an expected inverse head and shoulder. If this plays out, then we expect the market to continue going upwards. Okay, all right, fantastic. Now I'm just going to do an overview on GU and EU up to the daily time frame because I'm not trading it, and because I'm not trading it, I don't want to give an advice on something I am not putting my money on. If you're going to follow a forex trader, if you're going to trade with forex trader, you need to trade with someone that you're sure is convinced enough to trade what he's sharing. If not, well, you may be at loss while he's not losing anything. Okay, all right. So on GU, British pounds US dollar, this is the setup we have, and we're expecting that this price will move from here to this point. Okay, however, I want to draw your attention to this mini level here. Okay, now the reason why I'm drawing your attention to this area is because the market came down here. This is the monthly time frame, so every rejection is very important. Okay, so the market came down here, pulled up here, came down here, pulled up here, came down here, pulled up here, came down here, broke above it, came down here, bounced above it before coming down here. Now the price is approaching this level. There's a probability that the price is going to reject this level before even coming back up to this level. Now, if you know support levels, when support levels are tested, it will make it stronger, but at the same time, it's also making it weaker. In this case, I'm not expecting that this market will just break above it and come directly to this level. I'm anticipating that the price would test this point and probably come back down. Okay, that's what I'm expecting. So right now, if you look at the candlestick for last month, we had what we could call a shooting star because the wick is longer than the body, right? So it is possible that this candle will push up to this area, but make no mistake, we may have a heavy rejection to this lower area. Okay, and aside from that, we have something like a fair value gap. Yeah, we have something like a fair value gap here, so it's possible that the price may push up to this area, come down here before going upwards. Okay, so this is very possible. And one thing I don't like doing is I don't like buying a market when it's close to a possible area of resistance or rejection. The same way I don't like buying when the price, I don't like selling when the price is close to a support level. Okay, because one, I don't know what the market is doing. Two, my father does not own the market. Three, the market may turn at any point in time without consideration of the fact that I've done my analysis and I'm expecting it to get to a particular point. Okay, so on the weekly time frame, what do we have? All right, fantastic. So initially, you see, this point is the same area I marked on the monthly time frame, and I said I was expecting that the price would pull down from here and come here. Let me take this off so that it will be clear and visible. Okay, now what do we have here? The market has broken this range. Now the market has come here. What I'm seeing here may be a range market. So for example, what do I mean? The market came down here, created a low, came up here. Now it has created like an equal low, which means that we could expect an equal high. Then maybe the price may come down here, push up a bit into this point before coming back down to this area. Okay, so this is a possibility. All right, this is a strong possibility. If you ask me, this is a very strong possibility on the weekly time frame. Okay, so I'm not saying that the market may not buy. The market may buy this week, it may sell next week, but I would prefer to stay with gold and put all my resources and energy in gold that is showing me a sure buy from monthly down to 4-hour time frame than to trade this that is showing me that okay, the market may consolidate. Okay, now let me go to the daily time frame and see if there is something to show there. Okay, fantastic. Now on the daily time frame, we spoke about this range. The market broke above it, came back here, bounced off it, and then the market came down here. This was the support level and the market pushed up. And 2 weeks ago I mentioned when the price was here that the market would push to this area because of the Fibonacci level mark. This is 161.8 of this move, and I said that there was an order block here, so we would like to see the market respect the order block. So right now the market has given us a downward movement here, which is 1, 2, 3. So right now the market has come back into this order block with a nice bullish engulfing candlestick. I would like to see the market come back to touch this point. Okay, so it is possible to take a buy. Now let me take the order block, let me drag it a bit. Drag this a bit. So we have the order block here, right? So I'm going to apply a trend line above this level. Fine tune it a bit. So right now, if you are going to buy, I would suggest you look for a break above this level, then a pullback here for a buy to this level. Okay, so what am I saying? Here we have a low here, and we have this here, which is some saying I'm expecting something like a head and shoulder pattern here. All right, but this is the trend line. So yes, the market may buy here, wait for it to break above this trend line. When it comes to retest this trend line, in addition to this, let me zoom out a bit so that will be clear. Okay, so this is what I'm saying. We had the market come from here, up, then down here. So I'm expecting it to break above this point, come to retest this point, and then we'll buy to the stop part. Okay, let me delete the old line. I hope this is clear. This is also an expected head and shoulder pattern. I know some people will be saying, oh my god, this guy now only head and shoulder EDC. No be so. It's what I'm saying in the chart. I'd be more comfortable taking a buy somewhere around here than taking a buy somewhere around here, because this market may also just change direction. Let me delete it and show you what I mean. Okay, and this is the reason why I'm not trading GU. So the market could also do this. We had the market come from here to this point, then the market came down here, and the market came up here, and the market is here, right? The market could pull up to this area, say somewhere around here, just somewhere around here, touch it and do what? Come down here. Alright, so that's the reason why I'm not going to be comfortable buying here yet. Alright, because it's a 50-50 chance, and once it's a 50-50 chance, I don't think there's a need for me to take a risk. The reason why I have a trading edge is so that I could take the best advantage, or make the best advantage of the market in my favor. Okay, there's no way you're going to place a trade if you're sure that that trade is going to go against you. And if it's a 50-50 chance, for me, I see that as gambling, because I could also take that money, put into bet, and say, okay, I expect team A to beat team B. It's going to be gambling. So I'd rather wait for a bullish confirmation, meaning that 1, this trend line is broken, 2, at least an equal high is created, 3, I'll wait for the price to come and retest this point. Then if I see a candlestick confirmation, I can take a buy to this level. Okay, that is how I place my trades. Okay, so I'm saying I'm expecting something like this. In that case, once I see a setup like this with the candlestick confirmation, I can set my entry here, set my take profit here, set a tight stop loss below the candlestick confirmation, and I'll make a good reward on that trade compared to the risk I would be taking. Okay, so I hope this is clear. This is the reason why I'm not focusing on GU. But if I see a breakout, a higher high or an equal high, and I see a candlestick rejection somewhere around here, I'll be taking a buy. Please, if you're not on my Telegram page, ensure you do. I'm just going to put it here once. Okay, so join the Telegram channel. If I get an update here, I will probably post it on the Telegram channel, but I won't be able to post it here on YouTube, because it simply means that I'll have to record a new video, which I don't think I'll be doing. If you're hearing my voice, you'll notice that I'm actually straining myself to speak. Okay, alright, so now that we're done with GU, I'm going to go to EU, being our last chart for the week. Okay, so this EU on the monthly time frame, and you know, this drop was based on this. We anticipated this drop based on this, which happened earlier in the year, and then we had a bullish push and a bearish engulfing candlestick. Now this is my problem with these engulfing candlesticks. It shouldn't be repeated like that. For example, see this. When this market was coming down, you had one bullish candlestick and then what? Bearish candlesticks. And then you had one bullish candlestick and bearish candlestick, and here you had a bullish candlestick and then a bearish candlestick, and the bulls could not even push it further to this point before they had a bearish candlestick, which for me is a sign that the bulls are not really interested in buying yet. And when I look at this place, I can see a bit of a range, right? The market came down here, came up here, came down here, came up here, came down here. You can see that range, right, before the market actually broke up to this point. So what I'm looking at right now is this about to repeat itself here? Because right now there is a bit of a battle between the bears and the bulls here. Now after this candlestick, guess what happened? We had a bullish push last month, but there was an overwhelming bearish push back, making this a shooting star as well. Okay, so for me, I'm looking at this market. So we've had a push up here. Is it possible that this market is coming back down here? Then we may have something like this, and maybe it's from here it could come down or come up. I really don't know. And you know me, I've mentioned it not too long ago. Once I'm trading and it's a 50-50 chance, I would rather not place a trade on it, which is the reason why I'm also not trading EU at the moment. So these two bearish candlesticks are a source of concern with me, coupled with the fact that this itself is also a bearish candlestick pattern called a shooting star. Okay, once the wick is bigger than the body at the resistance zone, it's a shooting star, which shows that the price may do what? May fall. So for this reason, I really wouldn't be looking at a buy or sell at the moment. Okay, but let's look further on the weekly time frame. So this is the weekly time frame. If you remember, I marked this level and I said, okay, I'm expecting that the market will go up. Now there's a rule of thumb I work with when I trade range markets. Okay, so as you can see, there is a bullish candlestick that pushed it up, but this bullish candlestick did not close above this level. Why? Because after coming up, we had a bearish candlestick or two bearish candlesticks that brought it back into this range. The two bearish candlesticks brought the market back into this range. So my concern right now is this market may fall. I'm going to draw this here. So let's assume we have a high, a low, a high, a higher low, a higher high. Right now, before I will be looking for a buy, I'll be looking for this candlestick to come back to this area. somewhere around 1.0786 before we'll be looking for a buy. And the buy will be based on a candlestick confirmation setup somewhere around here. Alternatively, the market could actually do this: break below, retest this point, and do what? Come down. Now, if it comes down here, there's nothing stopping the market from dropping further, or from here coming back here and then ranging a bit. Now, you can see that here I can see a buy and sell, and because I can see a buy and sell, I'm not really keen on trading EU at the moment. Okay, so as I've explained, in as much as I'm bullish for euro pairs or euro related pairs, for EU I would like to see the market come down to this point. Once it comes down to this point, I'd like to see a candlestick confirmation setup to buy for a higher high. And if that is going to happen, I'll be setting a very tight stop loss somewhere around here, directly below the candlestick confirmation, to take a buy to a new high. Okay, so that's what I'll be looking at on Euro USD on the weekly time frame. So I need this price to come somewhere here, wait for a candlestick confirmation, then take a trade to the upside. Please, if you're not on the Telegram channel, ensure you join the Telegram channel so that you can take advantage of the market. Okay, of the market. All right, so I'm going to the daily time frame now. Now on daily time frame, this is what we have. All right, so this is the price here. We had here, let me zoom in a bit. Make it more visible. Okay, fantastic. So we had a low here, high here, equal low, equal high. Then the price did what? The price broke above this level, right? Broke above this level. Now it has come back here the same way it did for GU. Now, what am I expecting? I'm expecting that this market will do what? Push upwards. Okay. However, I also have my original trend line here, because this is the low, high, higher low, higher high. So this price may pull up, say, to somewhere around here, and then come down to this point, and from here I'll be looking for a long-term buy. If you remember, it's similar to what I did on the weekly time frame. So for now, it's back into the zone. I really wouldn't be itching to buy. I know that the candlestick confirmation gives us a buy setup, but at the same time, EU being EU can also reject this point and come down. The only time I'm going to buy EU is if I get a confirmation that, okay, this price actually comes above this level and creates a new body here. Then we may see a buy to maybe equal high or higher high. But for now, I'm just going to leave EU as it is. I'd rather wait for the price to come down here after hunting everybody and making them believe that, oh, the market is about to fall. And when the price comes here, I'll look for a buy to the higher high. All right. So all this being said, I hope me taking my time to break all this down would help someone. The aim of doing these videos is to help people understand how I think and how I see the market, so that they could also develop their own strategies, build themselves, and start making money consistently from the market by themselves. If you are not on the Telegram group, please ensure to join the Telegram group here. That's the channel there, Bearbull FX Free. Join the Telegram group, take advantage of the market. If I'm strong enough, or if I see juicy opportunities that requires me doing a video in this month of August, I will do so. If not, please work with what I've given. For those that watched my videos 2 weeks ago, as I anticipated it, as I spoke about it, as I mentioned it, that was what played out. including the ones that I did in the weekly time frame. So this is my summer video. I hope you enjoy it, and I pray that August is going to be a profitable month for you, as it will be for me. Till the next video, take care and do have a lovely week and month ahead. Bye bye.